What's happening, people? We're back today with another video on how we use fundamentals to catch absolute bangers like this. We caught this trade on GU on Wednesday, held overnight. We closed it on Thursday. Well, it hit TP on Thursday. So I just wanted to run through with you guys exactly why we took this trade. And there's a lot that went into it. It's not just based off technicals, right? So if you guys are tuning into our lives and consuming some of our content, you would know that the dollar is extremely strong right now. So what we need to be looking at in terms of the dollar, right, is whether they're looking to hike. So it's all about interest rates. Interest rates, what are we looking at? So this is the CME Fed Watch tool, which you should all be looking at. And it tells us the probabilities of a rate hike, a rate cut, or a hold. So you can see here, this year we are expected to have a rate hike. So in September we got a 26.6% chance, October 36, by the end of the year a 55.7% chance of a rate hike. So from this we can see that the dollar is extremely strong at the moment. If you're looking to hike, that means the dollar is strong. Now, the reason for dollar being strong and what we were looking at in terms of this trade, I know all of you guys know that there's a war going on right now with Iran and the US. So this war is heavily dependent on oil, right? It's all about oil. So what were we looking at in terms of oil for this trade? So with oil, this was my point of interest here. This low, once this low was taken, I expected price to rise. So this was the time that we took this trade on GU. So as soon as we took this low, you can see that we had a big increase in price. Now, this is due to escalation in the Middle East. Trump come out and said that they were going to attack Iran hard. Obviously, he's gone back on his word now after this trade, but prior to actually hitting TP, there was big escalations in the Middle East. Now, what does that mean? So if there's escalation in the Middle East, you're expecting a disruption to supply of oil. Now, all of you guys should know, simple supply and demand, right? If there's a disruption to the supply of something, the demand will increase. Now, if the demand increases, then the price will increase. So I was expecting higher prices on oil. Now, if there is higher prices on oil, this causes inflationary pressures on central banks, especially the Fed. So obviously, if there's an increase in oil prices, this would lead to higher prices all around for anything. Like, think about it, right? How does all the food get into the supermarket? It's through transportation. That requires oil. Almost everything requires oil, right? Any sort of energy revolves around oil. So higher prices in oil increases inflationary pressures, which then increases the chance of a rate hike, right? Because inflation is directly affects interest rates. So based on this is why we were looking at a stronger dollar. Now, not only this, you can see here with the US dollar, economic growth fairly strong, inflation data extremely strong, labor data as well fairly strong. So the US dollar is extremely bullish at the moment. Now, based on that, I was then looking at these shorts on GU. Obviously, if the dollar is strong, then we're expecting anything against the dollar to come down. So when I say against the dollar, it's a British pound against the US dollar, right? So if dollar's getting stronger, then GBP USD should be getting weaker. Now, once we looked at oil, we of course then have to go and look at US bonds. So this was the same low on US bonds that we were looking at on oil, right? So this low here. Once that was taken, we expected higher prices. Now, it was the same thing that I was looking at on US bonds. So once we took that low, we took it on the Tuesday, and then we gapped higher on Wednesday, right? We gapped higher. So it shows us a clear want for price to come higher in terms of the dollar. Now, we come down, filled this gap, took out that liquidity again, filled this gap, and then had that move to the upside. Obviously, it was a really big wick to the upside on the US dollar because of Trump's remarks in regards to attacking Iran. But this is exactly what we were looking for. We were looking for this low to get taken, for us to then fill this gap, which we did here, and then we have a push to the upside. Now, based on this, we were looking at them shorts, like I mentioned. Now, this was a trade that I held over 2 days, which normally I am an intraday trader, but where I had so much conviction in this trade. When you're trading in terms of macro and really having a heavy focus on fundamentals and the macro narrative, you're able to actually rinse these moves a little bit more. So, and not only that, right? There's also the fact that the pound is extremely weak at the moment. So I think all of you guys know there's been a lot of political instability in the UK in regards to the likes of Keir Starmer, which negatively affects the pound. But not only this, they're struggling, right? They're struggling with high inflation as well. This war in terms of oil and the inflationary pressures it's causing to all central banks is prevalent for the UK as well. So inflation is high, but that is not the issue. Inflation being high would increase interest rates, right? But there's also low growth in the UK. So where there's low growth in the UK, this puts the UK in a position where they're at risk of stagflation, which is obviously negative for the pound. Now, based on all this, and this is what a lot of you guys aren't doing, right? A lot of you guys are just looking at these charts, and you might have taken a similar short to me, but your whole reasoning for taking this trade would be purely technical. Now think about everything that I've just spoke about, and I haven't even touched on the technicals yet. I haven't even looked at the GBP USD chart, but I'm ready to get into these shorts. So this is how you guys need to start thinking. Every professional trader in the world has a macro understanding, a fundamental bias before entering into a position like this. So based on that, what we were looking at, so that same low on oil, which we were focused on getting taken before moving higher, was this high on GBP USD. So once that's taken, obviously we've had that big move down here, which is NFP. NFP come out very bullish for the dollar. So again, more of a reason to want to be short in this asset. We've taken out that high. Once we've taken out that high, I'm ready to get into this market. We've come up into the OTE area. We were respecting this daily fair value gap. Obviously, after this, Trump went back on his word, and that's why market has absolutely flown since then. But we're just looking at prior to this candle, right? So we're taking out this high, still respecting this daily fair value gap within here. We've come up into this OTE level. If I drag it across, you can see it a bit more clearer. We've come up into this OTE level, and then we're looking for the short. So my entry was simply just, once we've taken out that high, I wouldn't say desperate to get into the market, but I had really high conviction on this trade, so I wanted to get in as early as possible. So I got in off this 5-minute fair value gap here, and then just run it all the way down to them lows, right? To this low here, which was pretty much a perfect TP, because then Trump come out and went back on everything he said, and markets have flown since then. But this is just an example of how you lot can use fundamentals, and how you should be using fundamentals to trade like a professional. This is the only way to become consistently profitable. If you want to become consistently profitable, you won't get there just by looking at these charts. Anyone can learn technicals. You can learn technicals very quickly. I'm sure a lot of you listening to this do have a good understanding of technicals themselves. Now, if you're not consistently profitable, but you feel like you've got all the knowledge in the world in terms of technicals, there's obviously something missing. And I promise you, this is what is missing from your trading. Every professional trader, every consistently profitable trader that I know personally trades this way. They have a good understanding of the macro narrative, of the fundamental bias before entering any position. So this is what you guys need to be doing as well to be catching trades like this. I mean, this returned 4.73%. Now, if I go over to our Discord, you can see here, look at all these positions that we're taking. We had 3.1% there. We had 4.73% on this trade. I mean, just in the last 2 weeks of May, we returned almost 13%. The only reason we're able to achieve these numbers is purely down to the fact that we have a good understanding of what is going on fundamentally. Now, if you guys don't, then I'll definitely recommend getting into the Discord. We've also got our own macro desk on this Discord as well, which shows you everything that we're looking at in terms of fundamentals, macro, and geopolitical tensions. And yeah, just increase your exposure to this, guys. We do have a whole fundamental course as well, which is over 100 videos if you weren't interested in that. But regardless of that, just increase your exposure to this side of trading and try and get it out of your heads that technicals is the only way. Of course, technicals are great, but it's only a means to an end. All technicals done for me in this trade is that it allowed me to get an entry, a stop loss, and a take profit. Other than that, it was all based on fundamentals, right? So if you guys do want to start trading like this, the link's in our bio for our Discord. You can also book in a free call. I'm happy to have a chat with any of you guys about your trading, give you a bit of advice, and share a bit more about how we see the markets as well. But hopefully you got a bit of value from this video. But yeah, I'll see you guys in the lives and in the next video. So yeah, catch you boys soon.